Hi everyone, Andrew Thompson here from JBWere's Investment Strategy Group. Well, global equities are up about 15% year to date, and that's despite some softer economic data that we've seen. Now, while we are seeing early signs of a stabilisation in that data, and we do expect that to continue, we do need earnings growth to come through to justify the rally that we've seen year to date. Now, there is a potential for earnings growth to surprise on the upside, particularly given the low expectations going into this quarter. And consensus is for slightly negative earnings growth this quarter, followed by a couple of flat quarters and then a strong finish to the year. But we do need to see those earnings. So earnings season kicked off in the US last week, and so it is still very early days, but we thought we'd just give a few insights to what we're seeing in the names that have reported so far. And it's been a relatively mixed picture, but not too bad. So the banking sector has been relatively mixed as well. JP and PNC Financial were good, but Wells Fargo, Citigroup and Goldman Sachs were a little bit more mixed and a little bit softer, but not too bad, and roughly in line with what analysts expected. Loan growth still looks relatively modest, and we don't expect it to accelerate much given where we are at this stage in the cycle. Net interest margins look okay, but one thing we are watching closely in the banking sector is credit quality, given we have seen an increase in loan provisions being booked by some of the banks, and we'll be watching that closely as we go through the year. Netflix has just reported, and they've come out with a great quarter with strong subscriber number growth. But they have disappointed on guidance for next quarter. And one thing we are interested in with Netflix is their level of cash burn. So they are operating on negative cash flow, and more so than last year, or more so than the same quarter last year. And that's because they are investing heavily in producing their own content. Now that's interesting to us given the likes of Disney, which have just announced their streaming service, and Disney obviously have a lot of in-house content that they already own. So that could be a challenge for Netflix. And we expect the other big tech players will be reporting later this month, and so the outlook and guidance will be key there. Now, just moving over to healthcare quickly, Johnson & Johnson reported last night, and they had a good quarter, but with a strong revenue beat versus expectations, but litigation costs did pull down their earnings numbers. Now, United Health Group, the largest health insurer in the US, had a great quarter with 23% earnings growth, but that whole sector is coming under a bit of pressure at the moment, given some political interference with some, particularly Bernie Sanders' proposal for Medicare for all. But from our perspective, we do see that as largely noise at the moment, and we continue to like healthcare at this stage in the cycle, particularly given its outlook for earnings growth this year. So we do remain constructive broadly on equity markets. However, the market will be highly focused, and we will be too, on that earnings outlook and guidance for the rest of this year and into next year for any signs of a slowdown. But I'll be back in a few weeks' time to give you a bit of an update and some more insights as we head further along in reporting season. But in the meantime, of course, if you have any questions, please feel free to reach out to your JBWere advisor. Thanks.